Our topic is Apple Financial Risk Management and Market Strategy. Apple is an American multinational technology company founded in 1976. As one of the most important technology companies in the world, Apple has owned over 500 retail stores. Its revenue and net income was reached to $265 billion and $59 billion in 2018. Interest rate risk is a risk of financial loss caused by the variation of interest rate. From the chart, it shows that foreign markets interest rates play an important role on the revenue. However, U.S. interest rate is the biggest influence factor to Apple interest rate, which would affect the interest earned on Apple cash, cash equivalent, marketable security, and the fair value of those securities. Costs associated with hedging and interest paid on Apple debt. Apple exposure to interest rate risk is related to its investment portfolio and outstanding debt. Its investment policies and strategies are preserving capital and supporting the liquidity requirements, which aims to minimize the potential risk of principal loss. In order to achieve this aim, Apple adopts sensitive analysis to measure the impact of small changes in interest rate to accounting income and economic value. Apple's outstanding debt keeps increasing in these years. Data shows that until 2017, Apple has issued floating rate bonds worth $103.7 billion. When market interest rates are raised by 100 basis points, the annualized increase in debt interest expense would be $376 million until 2017. In order to manage the interest rate risk of outstanding long-term debt, Apple may enter interest rate swap, which allows the company transfer the fixed rate payment to floating rate payment.
Another risk that is faced in FDI is the foreign exchange rate risk. Because the revenue and costs that are generated in foreign countries are normally denominated in foreign currencies, and the value of foreign currencies in terms of USD always change. The foreign companies that are purchased would generate cash flow or incur costs, and the shareholder would benefit from such as cash flow. However, during the conversion process, the value of the foreign subsidiaries fluctuates considerably in terms of reporting currency. There are many strategies that are used to mitigate foreign exchange rate risk. In order to mitigate impacts from foreign exchange risk, one possible strategy is financial hedge. Financial hedge means that the company is able to use financial derivatives such as options, futures, and forward contracts to mitigate the possible risk that the foreign currency drops in value. Another strategy that is available to Apple is operational hedge. The operational hedge is used as a company increases costs in local countries, such as opening more facilities and purchasing more materials in local market, so that revenue and positive cash flows are reduced by such expenses. This would reduce exposure for Apple company.
In general, there are two types of political risk: macro risk and micro risk. Macro risk refers to adverse actions that will affect all foreign firms, such as expropriation or insurrection. Whereas micro risk refers to adverse actions that will only affect a certain industrial in the case of the economy of the foreign country's situations. For Apple, the external environment of the company is mainly affected by micropolitics. Government regulation, sales taxes, corporate taxes and import tariffs all have an impact on the company's profits. In addition, environmental and health regulations can force changes to the way companies in some cases. Certain products or parts of these products may be banned or found to be unsafe, which may result in recall of the product. In other cases, Imports or exports to a country may be cut off due to international politics. In the near future, the biggest political impact on Apple is the trade war between China and the United States. Since March 2018, China and the United States have been taking action on import and export tariffs, starting with billions of dollars worth of goods. To date, the value of goods has increased by up to hundreds of billions of dollars. The trade friction between China and the United States is getting bigger and bigger, and the situation is getting more and more severe. This is undoubtedly a big risk for Apple, the major supplier of Apple from China. According to Apple's fiscal year 2017 report, Apple's revenue in the Chinese mainland market in fiscal 2017 was as high as $44.7 billion, close to a quarter of the fiscal year. The escalation of the trade war between China and the United States will inevitably affect Apple's income in the Chinese mainland market, which in turn will affect Apple's stock price and shareholders' equity. In addition, as the trade war between China and the United States escalated from the second half of 2018, Apple's share price fell from $233 per share on October 3, 2018 to $142 per share on January 4, 2019. This is not difficult to explain the impact of political factors on Apple.
The 5-force analysis gives the insight about the external factors influencing Apple's performance. Apple's strategies are based on the need to adjust forces in the external business environment, which should influence the company's market share, revenue, profitability, and business development potential. The bargaining power of supplier is relatively a weak force result from the large number of suppliers, low switching cost, and a high concentration ratio of Apple to supplier. Due to the high brand loyalty and Apple's product ecosystem, consumers are motivated to stick with the brand, which reduces the bargaining power of customers compared to the market average. The threat of a new entrant to the marketplace is relatively low due to the high barrier to entry, such as the massive capital requirement and high cost of product development. Apple also gained cost advantage from economy of scale compared to the new entrants. The substitute to Apple product could be, instead of using an iPhone, people can use digital camera to take photos and landline telephone to make calls. However, this market force is considered low to Apple due to their limited features. Customers would prefer Apple products for its convenience and advanced features. The level of competition in technology industry is very high. Companies competing with each other aggressively in order to make the profit. Also, the switching cost for customers consuming other brands and low product differentiation make it a strong force in the industry environment.
The SWOT analysis of the Apple Incorporated provides insights on the marketing strategy and risk management, especially based on its opportunities and strengths to maximize its growth. Strengths. It is undeniable that Apple focus on research and development of advanced technologies, which has a strong research organization like Intel, IBM and HP. Overall, Apple has the best product design which advanced, stylish and unique iOS system. Apple is widely considered as the top 1 innovative company in the Forbes magazine's 100 Most Innovative Company for 2011. Weakness. Apple has quite a lot of competitors, such as Huawei, Samsung, HP, Dell, and so on. In addition, the Android system is a strong competitor of the Apple iOS system. Moreover, Apple products with the low production efficiency and high design costs. Opportunity. Apple has the opportunity to increase sales volumes through special marketing methods, adjusting the price. Furthermore, Apple can develop and introduce new products with further innovation, like what it has already achieved with the iPad and Apple Watch. Threat. International Data Corporation said that Apple held only 11.7% Apple had a challenging first quarter as shipments dropped to 36.4 million units, representing a staggering 30.2% from 52.2 million iPhones shipped in the first quarter of 2018.